to our next conversation, and we're discussing hospitals. Hospital stocks have started doing well off late. In fact, most of them are in the green, up 1 to 2% even today. Narayana Health is the company on our radar. Of course, Narayana Health witnessed quite a healthy performance in the first quarter, with highest ever quarterly revenue coming in. Average revenue per occupied bed is also up about 12% year on year. Margins have increased as well. So let's talk about the overall, healthcare sector and, of course, the way forward for the company. We have Sandhya J, Group Chief Financial Officer at Narayana Health. Sandhya, good morning. Thank you very much for joining in. I want to just start by understanding, what seems to be aiding the sector overall. I mean, most players, like we just mentioned, that your average revenue per occupied bed went up, but that metric was up for pretty much all your peers. And this is despite seasonality. So what do you think is sort of happening over here? Is it a larger mix of foreign patients? Is it that, a lot more hospitals are opening up? How do you describe the sector tailwinds right now?
Good morning. Thank you for having me here. So I can probably first comment for what's working for us, and then maybe we can take a little view on the industry. So I think specifically for us, the improvement that is coming in the average revenue per patient or per bed is coming largely because of the work that we've done on the efficiency side. We've not taken significant pricing impact because of how we look at pricing. It's like our last lever, and we have also a social objective which we try to achieve, and therefore most of our improvements have come because of the work we've done on efficiency, improving throughput, which we have spoken about in many conversations. That's driving the improvement in realization as well as driving the improvement in EBITDA. Now, as far as the industry is concerned, I think there are a few factors at play. One, of course, is that the demand has continued to be robust after COVID. Initially, it started with a little bit of a pent-up demand coming back, but now we believe that all the pent-up demand is over, and it's not a post-COVID hike, and in some form, it looks like it's a sustainable demand. So the way we are attributing this is that COVID's really improved the awareness of healthcare with people. And secondly, I think our medical capabilities in India have also improved over a period of time, not just in the past 2-3 years, but over a period of time. The quality of healthcare that we are able to offer to our people is really good. So, for example, knee replacement, which used to be like an extremely complex surgery at some point in time, is like a morning, evening. Now there are robots in our many of our hospitals where the patient can walk in 2 hours. And because healthcare is becoming more easier to avail, I think a lot of the demand, both for high-end as well as run-of-the-mill operations, is coming back, and that's the trend that the industry is encashing on. We are not seeing a significant increase in international revenue. We can't comment for other hospitals, so I may not say that international growth is contributing to this good performance.
So, Sandhya, just a question. Got that. It's not really international for you, and you've not even taken too much price hike, as you mentioned. And despite that, your margins have been sustaining at this 20% plus band, I think 22% as of the first quarter. So if it's all internal efficiency, what about pricing? Do you see, some sort of a price increase ahead? And could that aid margins, or will you not go down that road at all, and you're happy where you are with respect to margins?
Yeah. So we believe in predictability of pricing for our patients, and therefore we do a very structured pricing increase on the 1st of January every year. So for this year, our price increase is already done, and we have taken a very low single-digit price correction, mainly to account for inflation partially. So our next correction will come only at the beginning of next year.
Okay, all right. Hi, Sandhya. Good morning. Nigel on this side, and good to hear your views on the industry as well as on the company. Now, from a stock market perspective, valuation-wise, we have a couple of larger peers. Maybe, in fact, their mix is very different, whether it's Max or Apollo. But the bullish sentiment is maybe there is an opportunity to re-rate the stock, your stock, that's Narayana Healthcare. So my question to you is, on the average revenues per bed, you're in the high 30,000s odd, 37, 38,000 odd. Do you see that number headed towards 50,000? Point number one. And on the margins front, you're in the early 20%. Do you see yourself getting to the late 20% margins, both these two, directionally?
So I'll start with margins and then get to ARPOP.
Sure.
Margins, I think we will operate in this range only. Maybe slight improvement, but we are not willing to go on the late 20% kind of margin because that will need a significant correction on the pricing side, and that doesn't sit well with our the price at which we want to operate and the quality of service that we want to provide. We would probably operate at this margin. Maybe slight improvement coming out of efficiencies. We obviously are goaling ourselves on efficiencies, but we don't exercise the price lever so as aggressively. So therefore, I'm not going to give an extremely optimistic view saying we will go on late 20s on the margin side. As far as the average revenue per patient is concerned, so there are two matrices. The industry largely looks at average revenue per bed, but we recommend to look at average revenue per patient because bed no longer remains to be the only factor by which care is delivered. There are a lot of daycare procedures, morning, evening procedures, which don't count in the ARPOB metrics. But in general, as an outlook on average revenue per patient, I think there will be growth which will be aligned to the pricing growth which we have taken. So, and also, the other lever that drives improvement in ARPP is the more higher-end procedures that we are able to do. So if we move up the value curve, then that also helps in improving ARPP. So those are the drivers that we will work on. And we will see improvement. I don't want to give a forward-looking number there. And I don't think you will see that kind of very drastic improvement that you're talking about. But we will progressively keep improving our ARPP as we have done in the past.
Fair enough.
All right. No, that's great to hear, Sandhya. I mean, it's always, when we speak with hospital companies, it's always a bit of a dilemma, right?
Asking that question on margins.
How will you increase
kind of weighs
your
on us.
margins, average revenue per bed,
It's a catch-22 situation.
We all avail of healthcare services at hospitals, but the number of people who own hospital stocks is much smaller. So it benefits a few, but of course, I mean, yeah, it's a balance. But is that a durable competitive advantage do you guys think about it like that? That it's the fact that you're positioned in the more, cost-conscious way against your peers, for even those who are willing to pay. I mean, no one wants to pay outrageous charges. Do you see that as a durable advantage?
Yeah, maybe I want to clarify here as to what is cost-conscious. At the end of the day, for all of us, costs are similar. While, people feel that healthcare is expensive, but what we don't realize is that there is no incentives which are available for healthcare. So there is we pay, the highest customs duty. Most of our equipments are imported because that kind of technology advancement has not happened in this country yet in terms of, the significant chunk of equipments. Construction cost is extremely expensive. We are competing with the mainstay real estate for, land. So at that prices. So, the input costs are all very high, and not just for Narayana, but for everybody else. And therefore, it reflects in the price in healthcare. Now, our affordable segment doesn't come from individual price of costs being lower. Of course, we try to be as efficient as possible in our operations, and that reflects in our prices. But we believe that the cost of overall healthcare will come down if we are able to maintain the discipline of how care is delivered. Quality, only as much care as what is needed. The price is predictable. For example, we upload our prices at the beginning of every year into our website. So therefore, when someone walks in, they already know what they can expect. So giving them predictability. So those are the places where I think our affordability play comes. And of course, because in many procedures, we do very large volumes. So therefore, we have that cost advantage relative to others, which reflects in our prices. So from an industry outlook point of view, I think there is a lot that need to be done in making the business viable for the industry. Because on the cost side, there are no interventions. But on the pricing side, government continues to intervene from time to time. In the last year, we had GST on bed charges. Now, constantly we have price caps on medicines that keep coming. Now, there is an overall economics that hospitals work with. And if we are only intervening on certain aspect of that economics and we are not working on holistic solutions, then it's a little difficult for the industry to keep responding to these partial measures. So there is work to do for the government to work collaboratively with the industry.
All right, got that. Good talking to you today. Thank you very much for joining in. We really appreciate you dropping by, and good luck for the rest of the year. We'll take a quick break. On that note, on the other side, Shikhar Agarwal of BLS International Services joins in. We talk about how demand is shaping up and the outlook for the rest of the year. Then we also connect with VD Nanavati of Gujarat State Fertilizers to talk about the company's performance in the quarter gone by as well as the outlook.